Yes, both US-China trade deal, limited deal, and also optimism around Brexit resolution and withdrawal by the end of October are both fading. China believed that there will be no tariffs included in the partial deal. That has not been documented, by the way, just yet. But it's actually now the case that a December hike can and must be in place, the US says. Without an actual deal now, Aussie, Kiwi, as well as the Chinese yuan are going to be under pressure. On Brexit, the EU seems to believe that the British proposal is highly complex. Nothing substantial or detailed has been submitted by the UK. So on the day, we have the claimant count change for the UK today, which is a very important one to look at. Definitely we're going to see pounds moving. We have EU economic sentiment indicator for Germany, euro, dollar, a good opportunity. And of course, the Fair and Price Manufacturing Index and GTD price index from New Zealand. Starting on with the pound. Pound is moving exactly as we expected. There was, although the optimism faded on the back of the complexity of a deal that has not really provided much details for the European Union. They're not satisfied yet. We had a small correction that is likely to end a little bit lower for wave 2, and then we should be looking for wave 3, 4, and 5 to complete minor wave 1, then minor wave 2, and we should be heading all the way back to fresh highs. Now, the question is whether Brexit is going to happen at the end of this month. If not, then the situation will be a little bit worse for the pound. So we are very politically dependent, let's say, for the moment, but on a technical perspective, we're moving exactly as we expected. And we're seeing this as being a part of intermediate wave 3 that has a longer term, like above 140 or so. Now, on the other pair I wanted to look at is the Aussie against the dollar, and that is because we have also the trade truce, the partial deal or the limited deal looks like it's falling apart now because the Chinese didn't want any sort of tariffs to be part of a deal, but now there seems to be, like Munich in the US says that tariffs are going to be in place for a December hike in case, as an insurance, let's just say, in case that the Chinese don't buy enough US agricultural goods. So, you know, the optimism there also fades. We've had a very good run on some of the risk assets, okay, and include the Aussie, but now the Aussie was under pressure yesterday. And to be honest, this is supporting my technical view because in the longer term, seeing this 1, 2 as wave 3 of the intermediate wave, right? Now this part 3, we've done minor 1, 2, and we're also going for minor 3. Then we should have 4 and 5. Within the minor, we've had wave 1, minute 2, and we're going for wave 3. Okay, it looks like we are still in a corrective mode because we had a double bottom down here. That seems to suggest that we're going to go into a flat pattern or so. This is most likely to be the case. So we could have prices move up to the 69 level or so. And from there, we should be looking for prices to start moving lower. Of course, we could miss that. Okay, it's not necessary that prices are indeed going to move up to that level. We can just stop right here and move lower. And this would be pretty much the case. Of course, there are other scenarios that prices continue higher. We are really invalidating this move to the downside. Or this become more of a complex pattern that has a different labeling. But for the moment, we are looking a little bit bearish anyway, without, even in the short term, having any signs, being provided with any signs of bulls taking over, because we see that both the RSI and MACD are not providing any signals. We are above the zero line, everything, actually the histogram and both EMA lines, and this is the only thing that I can see as possible for the moment, as positive. So for that reason, we might see something like that, 1, 2, 3, 4, and then end above here, and this is where we should be looking for prices to start moving lower.